And let's move on to our chart of the day. Gap shares surging on earnings. Stephanie, you just bought more of these. I spoke with the CEO, but first, why do you like it?
Yeah, I started buying it a couple of weeks ago. Richard Dixon has been there, right, for since about November 2022. It usually takes a while for a CEO to kind of get their footing, and I do think they're starting to get their footing. And he brought in a new CEO of Old Navy, a new CEO of Athleta, a creative director for all of the brands, and he has a great reputation of fixing Barbie when he was at Mattel. So he's got a great track record. This is right up my alley, right?
Yep.
The stock's at 12 times forward, has a 3% yield. They had $500 million in free cash flow year to date, which is almost unheard of at Gap. They've been bleeding cash for years and years. But the quarter was actually very good. Total revenues actually, the fourth consecutive quarter of revenue growth. And they beat earnings. I think the guidance is kind of conservative, but numbers are edging higher. And I think, gross margins, operating margins, much, much better than expected. They're just operating really well. Yeah. They've got the brands. They just got to figure out the creativity around it. And I think that's what he's very good at.
Yeah. And, we talked about all this. I had this conversation with him after their earnings call. I want to just play a soundbite if we can. Sort of when I asked him, look, what is Gap's full potential? He referred to it, but what does that really mean? And this is what he said.
We've had some strategically well-intended initiatives that had flawed execution. And so that's why we're really working on establishing real consistency in our deliverables. We do what we say we're going to do, executing against our strategic priorities, strengthening the fundamentals of our company that reinforces and reinvigorates the brands to drive additional top-line sales. Once we get that going, there's going to be exponential opportunities that we'll be able to evaluate. Brand extensions, rolling out new concepts, driving new and additional stores.
Yeah, he had a lot of really interesting things to say. And Stephanie, to your point, they're growing share in both denim, which is core to their brand identity, right? But also active. And he said that Old Navy went from 6th place last year in U.S. women's active to now 3rd in just a year. Yeah. So they are figuring something out there with that basic of the brand and getting people re-excited in a category, apparel writ large, which is declining.
Absolutely. Compare and contrast it to Target.
Yeah,
right?
Exactly.
So that's why I say if Gap can do it, they've got the brands. Oh, by the way, you mentioned Old Navy. Old Navy comps were flat in the quarter, and they were a little disappointing, but a lot of that was weather. Their exit rate actually saw an increase in that. And then Athleta, total revenues, 5% sequential growth in total revenue, so also gaining share there as well.
Yeah, absolutely. And Kevin, we heard from Walmart earlier this week. Also another standout quarter, frankly. It seems like the trend is really in their favor, and they're executing well on all of their priorities. What do you make of this one, and where do you stand?
So we're going to be selling Walmart today, the entire position.
Wow.
I have a covered call written against it. Sometimes you get called away. We love the stock. We love what they did with this most recent earnings report. You compared it to Target. They're like the tale of two opposite cities. Foot traffic was up. Same sort of sales were up. People were spending more at Walmart than ever before. 27% increase online. They're making money in advertising that who would have ever dreamed of as a revenue stream. But some of the things are getting a little pricey. So if you talk about valuations being high as you kicked off the show, made me feel a little bit better. Their forward multiple is 34, a little bit high on Walmart. PEG ratio is a little high. I know you love hearing about.
You do know that I'm a terrible timer. Valuation's not good for that.
Well, listen, I'm not chasing you into this trade, but I feel like we look at a metric called enterprise multiple. So it's basically like, what's the free cash flow to price? And for the past 10 years, 12.4 is now trading at 17 times. So we got out of this entire position back in 2022 with a similar call away. Took us a little while to get back into it. We've been back since $50 last summer. Getting out in the high 80s isn't going to be the worst thing in the world. Any weakness that we see, and I hope you're right about it, to get a chance to get back in. We love the name. We're just not crazy about the upside from here.
Very interesting. A big sell position based on valuation. Rob, you were kind of giving him a hard time there about the timing. Do you disagree with this decision?
I was saying that valuation, he was referencing that I quoted valuation. It's traditionally a terrible timing tool.
Okay, fair enough.
So, while it indicates what forward returns may look like, it's not the best. It's not the best timing tool because we all know that markets can get overbought, right? I do think, though, from a sentiment standpoint, one thing that I would point out is the University of Michigan consumer sentiment gauges, right? And the mix of Republican and Democratic optimism completely flipped. Independence did not change at all. And I think those numbers have been showing positive trends for months. So one of the things that you look at going into the holiday season is you might be early getting off that train. That's fine.
Jim, you own On Holdings, so not a name we talk about as much as some of these bigger players. What do you like there?
Well, we were talking about it a little bit more recently because it's had a heck of a year, Courtney.
Yeah.
And, you know, when we were talking about Gap, I think about that stock and I think about how many times I've missed it because just frankly, and I'm not making a joke here, like I'm never going to know when like the Gap's chinos or T-shirts are in style. Stephanie, you're more in touch with that stuff. And when you catch a bid in the Gap, it's awesome. On Holdings has a bid right now, and this I can understand, and we can all understand. You can look at the running shoes. If you wear them, you know they're fabulous. If you see the extension of the brand into things like hiking shoes, I've got these hiking shoes I bought a few months ago from On. I absolutely love them. They're like literally my dress shoes right now. If I go out to dinner, I'm wearing these shoes.
That's because they make you 3 inches taller. You're trying to be 6'1".
I'm trying to keep it serious here, Rob, okay? No, beyond the brand extension in terms of apparel, which is also there, there's international expansion. There's a lot of runway here on. There's a great bid to the name, and it's just a fun stock to own right now. I think Gap, just looking at the chart, knowing nothing about the fashion involved, looks like it's on the verge of doing the same thing.
I'm not sure I'm that great on the fashion side of it, to be honest.
I'm not. On Gap, I mean,
I'm more like,
if I bought it, I'd tell you like they would have a fashion faux pas and it would go down.
But that's why, like, I know I owned Mattel when Richard Dixon was there. So I like, that's what I love to do. I love to find CEOs that have been one place and they've been successful, or not even a CEO, maybe it was a president or whatever, and they go and they're at a new company that has problems, because we know the Gap has had problems. So he can fix it.
It's the Starbucks story too.
Absolutely.
Yeah. And he is a brand builder. That is what he's known for.
That's right.
For certain. And I love that you pointed out that it takes some time, and maybe now we're starting to see that.